Good morning, everyone. Let us start with day 16 of our regular SAP FICO session. The topic that we'll be covering today is FIMM integration, means integration of financial accounting with procurement module. So, first let us discuss about the process flow. Process flow meaning the steps that exist in the procurement process. So, the first step is the request for quotation. Second is the creation of purchase requisition. Third is the purchase order. Fourth is the approval of the purchase order. Fifth is the GRN, means goods receipt, and sixth is the invoice receipt. So now we come to know that there are 6 steps in the P2P process or procurement process. P2P means procure to pay process. The 6 steps, let us see once again, are request for quotation, purchase requisition, purchase order, approving the PO, and receiving the goods, and booking the invoice from the supplier. Now, what is the role to perform these steps? So request for quotation is created by the purchaser. Similarly, PR, that is purchase requisition, and PO, that is purchase order. All these 3 steps are done by the purchaser. Approving the PO is done by the purchase manager. The GRN is posted by the GRN, means goods receipt note, or the goods receipt is posted by the warehouse clerk, and the invoice is posted by the AP accountant. So now we understood the role that is involved in each of the steps. Next, we'll try to understand the FI impact, means the financial impact of those steps. Step number 1, which is request for quotation. There is no financial impact, reason being journal entries are not posted during the requesting for quotation. Next is creation of the purchase requisition. Also there is no journal entry and hence no financial impact. When the PO is created, again there is no financial impact as no journal entries are created. When the PO is approved, again there is no financial impact. So the financial impact is during the goods receipt and during the invoice receipt. The reason is at these 2 steps the journal entries are posted. Let us also try to remember, but which is not mandatory to remember as of now, the OBYC code. So the OBYC code that is useful in procure to pay process or P2P process or MM process are BSX and WRX. BSX and WRX. If you can remember it, well and good. If no, there is no harm. We will see those things practically in the system. So by now we understood that there are 6 steps in procure to pay process. Different rules that need to be assigned to perform these activities. The OBYC code and at which step we have a financial impact. And we understood that during the GRN, goods receipt and invoice receipt, we have a financial impact. That is where the procurement module is integrated with FI. So if you are being asked at which step there is integration of FIMM, you can tell it step number 5 and 6, that is the GRN and invoice receipt. Now let us try to understand what journal entries are posted during GRN and what journal entries are posted during the invoice receipt. To understand this, we must bifurcate our PO type. So there are 3 PO type. One is material, one is service, and the other is asset. Within asset, we have 2 scenarios. non-valuated and valuated. So PO can be of three types: for material procurement, or for service procurement, or for asset procurement. Again, if it is for asset procurement, that PO can be evaluated or that can be non-valuated. If it is valuated, GRN, while posting the GRN, accounting entry is posted. When it is accounting entry is not posted, accounting entry is not posted. But when it is evaluated, then accounting entry is posted. So PO is classified into three types: material, service, asset. For asset, it may be evaluated and non-evaluated. For non-evaluated, the GRN entry, during the GRN, the accounting entry is not posted. For the evaluated cases, the accounting entry is posted during the GRN. Now, let us try to understand what accounting entries are posted. If it's a material PO, then the entry that is posted is inventory account debit to GRIR clearing. And if it is a service PO, then expense account debit to service clearing. And if it is for asset and non-valuated case, then entry is not posted. And if it is for asset and the case is valuated, then technical clearing account is debited and asset GRIR is credited. And this particular entry is accounting principle independent. We'll talk in more detail in our coming session what is accounting principle dependent and independent cases, but as of now, on a high level, you can remember that the general entry is technical clearing account debit to asset GRIR. And the another entry that is automatically posted during GRN is asset account debit to technical clearing account, and this is accounting principle dependent. I do not want as of now you to understand the accounting principle dependent independent in a much deeper sense. The logic why the two entries are posted, why a particular GL account is debited, why the next one is credited, we will understand these practically in the system, but as of now I want you to understand on a high level what journal entries are posted. So we understood if it is a material PO, then the accounting entry is inventory account debit to GRIR. If it is a service PO, expense account debit to service clearing GL credit. And if it is non-valuated, no accounting entry. If it is valuated, then technical clearing account is debited and asset GRIR is credited for accounting principle independent entry. And for accounting principle dependent entry, asset is debited and technical clearing account is credited. So this is about the GRN entries. Coming to the invoice entries, case number 1 I have made as non-valuated GRN. The PO is for the PO is a non-valuated PO, and during the GRN there is no entry, so the entry gets booked for asset capitalization at the time of invoicing, wherein accounting principle independent entry is technical clearing account debit to supplier account. Technical clearing account debit to supplier account. And the next automatic entry is asset account debit to technical clearing account. Asset account debit to technical clearing account. And in case TDS is applicable, TDS is always credited. In case GST or VAT or any indirect tax is applicable, that is debited. In case of RCM, output tax is credited basis the reverse charge mechanism, and since we are able to claim the input of the same, tax input is debited. Tax output is credited and tax input is debited in case of RCM. So let us try to understand. Case 1. Case 1 is for asset capitalization PO, wherein the GRN is non-valuated, means the accounting entry is not posted at the time of booking goods receipt. Then the accounting entries should get booked for asset capitalization at the time of invoicing. So we understood that at the time of invoicing, there are two accounting entries that get generated. One is accounting principal independent, another is accounting principal dependent. Accounting principal independent view is also called operating view, and accounting principal dependent view is also called evaluating view. So asset gets debited or asset get capitalized only in the evaluating view, which is a accounting principal dependent accounting entry. Now we understood that if the GR is non-valuated, accounting entry gets booked at the time of invoicing, which is technical clearing account debit to supplier account, the first entry operating view, and the second entry is asset debit to technical clearing account. And we understood if there is a TDS applicable for the supplier, TDS is credited. Tax, if applicable, that is debited. And if the case falls under the reverse charge mechanism, then output tax is credited, input tax is debited. Coming to case number 2, wherein the GRN is valuated, means the asset is already capitalized at the time of GRN entry. So what happens at the time of invoice entry? Invoice entry, the supplier is credited and the asset clearing account, that is the asset clearing account, that was debited here. You see, asset GRIR account is nothing but the asset clearing account. During the GRN it was credited, and during the invoice receipt it is debited. So the clearing account has zero balance in total. Once the invoice is posted, this is called three-way matching: PO versus GRN versus invoice posting. Again, if there is a TDS applicable for this supplier, TDS is credited. If input tax is applicable, if input tax is debited, and if it is for RCM, then tax output is credited and input is debited. And these entries are based on the journal entry principle, guiding principle that we discussed in our earlier sessions. Now, case 3, if it is for a material PO, we know that the entry is posted at the time of GRN, wherein the GRIR account was credited. Here you see the GRIR account was credited. So now here the GRIR account is debited, and in turn the supplier account is credited. For the TDS and VAT or GST or any other indirect tax, the concept is same. Input tax is debited, TDS is credited, output tax is credited in case of RCM. Again, for the service, there is no change in the accounting entry, that the service clearing account that was credited during GRN is debited here and supplier is credited. For the TDS and input tax, the impact is same. So let us quickly revise the whole concept of FIMM integration or procure to pay cycle or procurement cycle or P2P cycle in short. We understood that there are 6 steps. For the first 4 steps, we do not have any accounting entry, there is no financial impact. For the next 2, there are accounting entries and hence there is a financial impact. We understood the role which should be assigned for performing each of the steps. We understood the OBYC code, that is BSX and WRX. We understood that PO can be of 3 types. It can be a material PO, service PO or asset PO. Within asset, it may be evaluated or non-evaluated. We also understood if it is non-evaluated, GRN entry during the GRN accounting entry is not posted. If it is evaluated during the GRN, accounting entry is posted. Further, we understood what accounting entries are posted for material PO, for service PO, for asset in case it is valuated and in case it is non-valuated. Similarly, we also understood the concept of accounting principle dependent and independent, and operating view and valuating view, and what accounting entries are posted in case of non-valuated cases during invoice receipt, and what accounting entry is posted for the valuated GRN for asset capitalization during the invoice posting. Similarly, we also understood what accounting entries are posted for material PO and for service PO. I hope now you have a fair understanding of FIMM integration. With this, we will close the session for today and we'll meet again tomorrow. Thank you.